and it was a reactive approach. So we ended up happening a weak financial infrastructure, poor liquidity management, and very high cost of operations. That was not optimized. Now we see the role of CFO almost like a supply chain manager of dollar, of finances. Now somebody has to manage the finance, the dollar, the rupee as it moves from your treasury, from your bank, your stakeholders, all the way to your customer or to your vendor, and from your customer all the way to your own bank. Now somebody has to manage that cash flow, and that is the changing role of the CFO. It is more collaborative. It is no longer a backseat, back office operation. And when we look at the integrated financial management, we look at something which is out there to optimize the performance, optimize the financial performance of the company, and to manage risk and compliance. The role of CFO in managing risk can no longer be underestimated. And that can only happen when you can do trend analysis. And historically, we see more and more CFOs which are looking more in terms of risk analysis, which are looking more towards trends, which are looking more towards the future rather than being on a standard compliance PO approving authority. All this, you have seen this particular slide in various forms throughout the presentations earlier on. What we see here is, and it is very interesting to note that coming from an IT perspective, coming from somebody whose most of the customers are here, we pretty much have the same, we pretty much see the same trends coming in. We do see the aligned strategic decision making across various teams. So it is no longer an isolation that, people cannot make pricing decisions independent of the role of a CFO, because it does impact him. You cannot make promotion decisions independent of the CFO. And that decision should not come in as for an approval only. That decision needs to come in as a collaborative approach. And that is the changing role that we see of a CFO. We do see increasing role of CFOs in strategy formulation. Not monitoring the KPIs, increasing role in strategy formulation. I'm going to hurry up a little bit. What we also see are the four main areas where we see CFOs focusing these days. The enterprise performance management, that will remain. We do see the role in business planning, profitability and cost management, spend analysis, and strategy management. That is something which we see is an increasing role of CFO. We see a major impact and major needs arising in governance, risk and compliance. Risk management is another major area. We see information discovery and delivery as a major role of CFO, and you see increasingly the IT department, the information technology department, or even in some cases the strategy department working very collaboratively, if not reporting directly to the finance. We also see that all of these, if we look at the bottom circle, we also see that where your transaction processing systems are there, increasingly as a CFO, CFOs are more and more focusing not just on the transaction processing system, which is the procurements and the GLs and the P&Ls and cash flow statements and all that, to more of an analytical role. They are focusing more on enterprise performance management type of systems. And that is something we believe is going to continue. Now, how do you actually do this? And what most of the CFOs have asked and use our systems to do. One of the very interesting things that we've seen is the actual simulation. Now, again, I refer to Sajjad Syed again and again, one of our customers here, is a lot of times people come and ask us that we have a certain business model which is built. How do we know that if a certain thing happens, how will our entire variable business model changes? What if, for instance, our gross sales decrease because of some certain thing happens? You need a system which can automatically tell you what impact it is going to happen to the rest of your business. What happens, for instance, if there is your sales decrease because there is a manufacturing problem? You need to be able to come and simulate the entire business scenario, so you can take corrective actions immediately and not 1 month later. What happens if your, for instance, you know that your taxes are increasing or decreasing? What impact is it going to happen to the rest of your business model? These are the type of things, and this is the type of technology that I believe CFOs need today, simply to be able to proactively manage risk. What is going to happen? So the questions in the board, like what is going to happen because we are having a certain problem in the supply chain, we believe that our selling expenses are going to increase. What do you think is going to happen to the, what do you think is going to happen to our net income? Those are the type of questions that you need to automatically simulate and automatically tell the board that this is how we are going to do it. And these are the type of technologies which will enable. Today's CFO, we believe, is not a record keeper. We believe he's not a record keeper. We believe that he is somebody who can look into the future and who can tell various scenarios which are out there and what impact is going to have on the business, and take proactive corrective measures, or to suggest proactive corrective measures. He is the role of CFO and CIO is going to merge, and it's going to merge very quickly in the future. Another some interesting things that some of our customers and CFOs are doing today is managing, for instance, the working capital. If you have various profit centers and cost centers, one of the things you would want to know, or any CFO would want to know or should know, is the exact, in real-time fashion, exactly what is happening all across your various business entities. No longer, be it a geography, be it a relationship with a certain bank, be it in a certain currency. These are the type of things that you need to know on a real-time basis, not after a month. After a month, things would be very different. After a quarter, things would be even worse. Because by the time you take the corrective action, that particular problem may not exist. Maybe there will be 5 other compounding problems. Similarly, there are things and simulations that you need to do on your working capital. What would happen if your target return on assets, if you decrease your return to assets, can we change our various KPIs? So invariably I see CFOs having certain key performance indicators and monitoring it almost on a daily basis, and seeing as linking real time to their sales, to their procurement, to their manufacturing, looking at the trends and simulating what would happen if things were different. It is no longer about the past, corrective measure about the past, which historically we've all been doing. It is about corrective measures for things which are expected to come. Again, I look back at SAP as a business that I manage myself. I think globally we were very good at predicting that there's going to be a serious economic downturn. In June of 2008, we got our instructions and all that, start capping your capital investments, start capping your, do this, cost cutting, this, that, and the rest, in June of last year. So when the economic downturn global came somewhere around October, November time frame, we were pretty well set. We had absolutely, in our region, Pakistan, Southeast Asia, we had absolutely no headcount reductions. We didn't have to go that far. We actually made almost 60 to 70% net profit in Pakistan. So we were able to predict it very well, and simply because we ourselves used some of these simulation tools. We knew that Q1 and Q2, we were just talking about it, we knew that Q1 and Q2 are going to be absolutely disastrous. But we were hoping and expecting, and alhamdulillah it did happen. And if somebody wants to go to the historical way of looking at things. Just one last few other slides, because I've been told to hurry up. A lot of times, you can even go, and should actually go, and have people to go into further detail and look at your at cash flows at all time. Now this is one of the most I would say, critical piece of information, which